Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. One company that I think continues to be really underestimated by the market is Dropbox. This is a $7.2 billion company, has actually declined in value over the last 5 years despite about doubling its revenue. Now, the company recently announced layoffs, but I think it actually really tells a lot about the company's leaders, where they're investing, and where they're looking for opportunities, because this wasn't a normal layoff where we're just trying to cut headcount. They're really trying to shift where they're investing in the company. So I want to get into the announcement and then the financial results that we've seen over the last few years that really make me intrigued by Dropbox. My name is Travis William. Thanks for watching Rive Investing. Please subscribe here on YouTube. And for a closer look at companies with big potential like Dropbox, check out Asymmetric Investing. There's a link in the show notes and you can find my work there. And the first thing I want to do is frame this discussion with a look at Dropbox's financial results, because they're really impressive. You can see here that revenue is up to $2.3 billion over the last year. That's about double from 5 years ago. And the stock has seemingly gone nowhere over the same period of time. We've heard a lot about tech companies trading for 10 or even 100 times sales. Well, Dropbox right now is trading for about 3 times sales. And not only is it trading for 3 times sales, it's actually profitable and generating free cash flow. That's what I think is really surprising once you start digging into this company, is it has just got a great solid foundation from a financial perspective. And what are they doing with that cash? Well, one of the things that they're doing is buying back stock. Shares outstanding in 2020 hit almost 425 million, down to 350 million right now. So this may not be a high growth company, it may not be a sexy stock, but financially it's a great performer. And that gets me to what I wanted to highlight here, which is the layoff announcement that Dropbox announced recently that I think was really telling about the company. And this is the blog post here, a message from our CEO, Drew Houston. And they announced pretty significant cuts, 16% of the workforce or 500 employees. Spent a lot of time acknowledging the impact that that's going to have, and actually has a pretty good severance plan. Even allowed employees to keep their computers and other devices that Dropbox had purchased for them. So I thought that was really interesting. But this is really the key here, why we're making this decision. This is a profitable and stable business, but acknowledge that the business is naturally maturing and there's been some headwinds from economic downturns. So it's maybe telling us a little bit about how the company is performing financially in the first quarter. And with earnings coming up, that's definitely notable. But the next piece is really talking about artificial intelligence. And to really sum up what he says here, AI is going to be an area of growth for Dropbox. So sees a lot of opportunities there, but sees it as a way to get more out of employees. I think a lot of the great use cases for artificial intelligence today are really on the programming side of things. So maybe the business can do things more efficiently with fewer people, but also they need to have the right people in the right positions. So this isn't a case where you're just going to be able to take one employee and move them over to be an artificial intelligence expert. You need to hire new people to fill new roles. And that's really the biggest driver behind these layoffs. He even says that here, in an ideal world, we would shift some of our employees from one team to another. We've done that where possible. However, our next stage of growth requires a different mix of skill sets, particularly in AI and early stage product development. So again, seeing that maturing business, that's really the core right now, but it's a maturing business that doesn't need the same kind of investment that it did in the past. And if they're going to build out these new products, they're going to have new people working on them. So Dropbox is definitely going through a level of transition as a company. It's going from a mature product with the core Dropbox products that we know today, but that's a very profitable business. And that actually gives the company flexibility to acquire or develop new products for the future. And that's exactly what we're seeing with this layoffs. Layoffs are never great for a company, but this was one of the most interesting letters that I've seen because it laid out exactly the reason for it and basically said we may not reduce headcount long term. What we're actually looking to do is have different people with different skills working here. So not the easiest thing to admit as an executive, but I think that says a lot about Dropbox's CEO and the team that's leading the company there. I'm still intrigued by this one. This is not a stock that I own yet, but it's definitely on my short list. And it's because of things like this, where even hard decisions that need to be made seem to be handled the right way at Dropbox. But what did you think about this announcement or Dropbox's future? I'd love to hear your comments in the comment section below. Don't forget to subscribe to Rive Investing. Thanks for watching, everybody. I'll see you here next time.